All right. Hi. Good morning, Mark. Great chatting with you. Let me first start off by getting a sense as to what's it looking like in terms of FY27, in terms of earnings growth, because that all of the policy that has been made seems to be pointing towards growth both on top line as well as on earnings. When does that start to happen, in your opinion?
I think it will start to happen in the next quarter. It didn't happen in the current quarter because the GST cuts only really just happened in the last week of September, and so people were waiting for that. So I think we'll have to be patient, I'd say, throughout the impending quarterly results. But beyond that, I would expect an acceleration, and numerous anecdotes, I think, are already showing us we'll see that. So for fiscal year 27, which of course is the period beginning in March next year, we should look for around, we think, 16 to 18% earnings growth for the Nifty. And if we're right, then I think that makes a strong case for the market to go up next year.
Mark, what will be the sectors which are poised to benefit the most from the earnings upside that we will see? Because obviously we have seen some margin expansion which has reversed in FY26 already. So will that trend continue? Will the margin contraction to a certain extent continue, which will keep a lid on earnings in some sectors? Give us a sense on which are the sectors which will benefit the most.
I'm sorry, I actually don't have that many sector insights. I apologize. But I just say intuitively, with these big cuts in the GST and the income tax, you would think that the consumer stocks would benefit the most. I think that there's so many interesting things to look at in the Indian market. I don't tend to be sector specific, but consumer is the one intuitively that you'd expect to benefit from the changes to the tax regime this year and benefit from the decline in interest rates.
Right. Mark, hi, morning. Good to be speaking with you. Give us your sense on the comments that we've been hearing from the US, from Trump, from Besen, talking about the possibility of the US shutdown now reversing and the economy now opening up, or the government rather now opening up. Give us a sense of what the cascading effect could be on some of the major global economies, and how positive could this be for the US economy itself?
I don't really think there's that many impacts for the rest of the world beyond sentiment. But if you look at surveys of what people are worried about, in fact, the government shutdown never figured highly, I think because people rightly realized it would not continue for much longer. And I doubt it'll continue beyond the next few days. It seems they're coming to an agreement. The number one concern in America is that the labor market is rolling over, and it's rolling over too quickly for the Federal Reserve to intervene in time to stop it. For the record, I don't think that concern is legitimate, but it's been catalyzed by some private sector data, particularly a job cut report from a company called Challenger, Gray and Christmas, which is an outsourcing company. And they tabulated that there were 153,000 job cuts in October. That's what really catalyzed this concern about the labor market. And in the absence of government official data because of the shutdown, we're kind of in the dark. But there are some other data to look at, and the automatic data processing company's payrolls number is one, which showed a healthy October. The Chicago Federal Reserve constructs its own estimate for unemployment, which shows it's still at about 4.3%. And lastly, if you tabulate all of the state-level initial jobless claims, that important labor statistic is just tracking nicely sideways. So government shutdown, I don't think it's going to last much longer, and I don't think it's a big deal. The bigger deal is the concern over the labor market, but I also think that's overstated.
Right. And Mark, no, while you've been of the view that this government shutdown has not had much impact on global economies and the US itself, the one asset class that has seen a run-up on the back of this mixed sentiment is gold. What is your take on precious metals, gold and silver? Do you think there are more legs to the upside rally? Because recently we've seen both of these precious metals see a little bit of a cool-off.
Well, obviously there was what we call a blow-off top in gold about a month ago, and since then it's been building a new base. I think that it could still go down more. Technically, it does not look strong, but longer term, the reasons to own gold are still very valid, which have always been the same reasons throughout history, by the way, namely that it's a good hedge against inflation. So over the last 100 years, the gold price has risen versus the US dollar about 5% per year. On top of that, now we have the shifting sands of the way the world is run. It's clear that the so-called Washington Consensus, which was basically a way the world was run, led by the Western countries, the United States and Europe, that is fading, and we're not quite sure what the new global framework looks like. It's going to be what they call multipolar, and in that sort of volatility politically, there is a greater appetite for gold, given these uncertainties with geopolitics. So I would say that $4,500 per ounce about a year from now is still a realistic price.
And Mark, your sense with regard to AI and how that is impacting the global markets, as well as what the ripple effect of that on Asian, in particular Indian markets, could well be?
It's clear, I think, that the big technology companies are successfully monetizing, artificial intelligence. In their third quarter results, we see increase in the quality of the advertising revenue. They're able to identify much better through AI what people are interested in and cater to that. It's also clear that artificial intelligence is linked to job losses. Earlier, I mentioned the Challenger Gray and Christmas job cuts for October, 153,000. If you look beneath the hood, that was really driven by artificial intelligence in the technology sector. So they're increasing their profits also because they're reducing their labor cost. And the Mag 7 are enormous companies, but they're not actually big employers. All 7 of them, excluding Amazon, employ about 500,000 people in the United States. So to put that in perspective, that's about the same number of people who are employed in the healthcare sector in the state of Idaho, which is not a very populous state. There's 1.3 million people working in healthcare in Florida. So that's what I think about AI. It's clearly becoming accretive for companies. I think it will for the economy too. But there will be some what they call collateral damage in the labor market.
All right, Mark, sense on FII buying, if at all that can be anticipated very, very quickly?
I have no sense of it, but if you look at the foreign holding of India, it's down to about 15% of free float, which is near historic lows. I don't really see why anybody would become a new seller of India here. And the selling of India that has happened this year is mostly, in my opinion, to fund China. And people who wanted to do that, I think, have already done that. So I don't think there should be much more foreign selling from here. And if the earnings turn around next year, there should be foreign buying.
optimistic over there. No more foreign selling and perhaps some foreign buying is what we're seeing. Mark, thanks so much for your time and appreciate